Hello traders, this is Rich from Tradesight. This is the market preview for Thursday, July 17th, 2014. Had kind of a mixed day today by most measures. The S&P was higher on the day, as was the NASDAQ. The broad market was the big winner with the best relative strength, while the smaller stocks were by far the weakest, with the Russell actually closing negative on the day. The advanced declines were not really that great. We're plus 300 issues on New York and minus 400 issues on NASDAQ, and the trend closed down at a skinny 0.67, which will move the needle for the 10-day trend average. Here's a look at the ES futures. The ES futures were higher on the day, but really didn't make any real progress because we closed below the day's opening and didn't take out the risk line from the seeker exhaustion warning. The 8-ace level is still quite a bit higher at that 2,000 level. But for now, the market had a little bit to work on and didn't really show too much for it. Key support remains where it was used today at the 10 EMA to the downside. We're still really stretched above most of the major moving averages in this particular index. The NQ futures had another distribution day where they closed well below the day's open. We did make a new high intraday on the move, but didn't really build on that too much. This actually was a precarious new high close on the move, but certainly was a distribution day by all measures. Key resistance is going to be at the 7-ace at 39.84, and support is going to be right in the area of 6-ace and then the 10 EMA. Russell Index was lower on the day. We're 8 days down now, which is an important development, right into the 50-period moving average. As you can see, this has definitely been the weak link of all the major averages. The MACD is back down to the zero line, so if we penetrate this after potentially gaining the 50 DMA, or maybe just going a little bit sideways here, we're going to have a release to the downside here that could travel and span some good range. TLTs were higher on the day, but didn't make a new high on the move. We're 7 bars up now in the seeker startup phase. So on bar 8 or 9, we're going to start to begin looking for some better resistance. Oil futures on the day were a little bit higher, and potentially starting to secure this 4-ace level at 100. So I would definitely consider this 6-ace level at 103, or the 50-period moving average at 103.5 to be the likely bounce target on the way back up here, if in fact that's in the cards. Gold futures did nothing on the day, still just hovering here above the 50. Definitely not as interesting as the oil futures, because the oil futures have that have the bar count plus that key level at 100 to work with. Let's get right into the individual sectors. The defensive-minded XAU was a top gun, but it wasn't too far ahead of the oil services and the XOI. So it was a pretty good showing here by the late cycle stuff. Keep an eye on the OSX and the XOI, and maybe even the XLE, which tracks the broad market large oil companies. If oil's ready to turn up here, those could see some bounces back to the upside. The PTK was the last laggard by a decent amount. The BKX was also fairly weak on the day. Transports were up 0.6%, which was fairly decent, all things considered. So definitely a good showing today by the late cycle stuff, which is certainly welcome. Semiconductors were also fairly strong today, in light of the NASDAQ just kind of being in a malaise. As I mentioned earlier, the put-call ratio, the trend today was at 0.67, which definitely moved the 10-day average downward, 0.94. We're actually getting pretty close. We're close enough to really get a shot at that 0.85 overbought threshold. So if we do record that, we're definitely going to feel the effects of that in the overall market and start to see a return to the downside in the overall market. So for now, just be aware that we're within shooting distance of getting that climactic reading to the upside. So if we roll to the downside within a day or two, we could see that reading. So make sure you're on top of this chart. Here's a look at the late cycle multi-sector chart. Kind of just mimics what we had seen before. Starting to see the oil services, which is the which is the gray line, start to approach the previous highs, but the real winner is the transports. Even though they weren't the top gun today, they did break out to a new high and are showing good relative strength. So definitely positive, seeing some good price action out of the transports and the oil services. Just want to make sure that the oil services can really get up here and take out the previous high. The oil futures themselves are poised for a bounce here, so if we get that, we could easily see some acceleration to the upside. Here's the OSX, which pivoted back above the 10-period moving average, 9 bars up in the Seeker countdown phase. So definitely have plenty of time here to hit the 8-ace level and maybe even get into the overbought territory if the market can build on the day's gain. Semiconductors were also fairly strong today. Intel reported had a big gap up, so that produced a new high on this move and a new high close. So we're 9 bars up now. We have a good deal of room here before we run into any overhead here at 7-ace, or more importantly 8-ace, which is quite a ways away. So for now, still just chugging along here, trying to break out of this range. We'll need another day up here to really confirm this little mini breakout that really didn't follow through yet. Transports made a new high on the move here. Note that we're bumping up against the plus 2-ace level. We have a 13 exhaustion in place now on the Seeker exhaustion phase. So this is a pretty notable development. So I would expect that we're going to start to see some fatigue here in this sector, but maybe not a reversal. Maybe not a reversal because we've got the one candle here, and the 13 doesn't have a whole lot of extension. So when you have that condition, you usually wind up going sideways, or maybe just some sort of a kind of a muted downside move, but nothing that's going to just completely collapse and roll to the downside. BKX was kind of a laggard today, as you can see. Closed back down below the 8-ace level. We have this 13 exhaustion in place, which has better extension than the chart that we just looked at. The chart that we just looked at was fairly flat. We've got better extension here, so we definitely could see some lower levels in play. So potential change-up candle here, but have to see how it follows through. All right, last up here is the BTK index. The BTK index has really been very weak the last couple of days. They went back up to check into this 8-ace level, but starting to roll back to the downside. Actually made a new low close on the move here, with the 6-ace level and the 50-period moving average being the next targets. We don't have the Seeker exhaustion warning in place, which is a little bit of a shame, because this could be a nice lower high here, but we don't have the comfort of that being on the chart. But nonetheless, we are seeing some downside here, and should continue to make sure you have some shorts ready in this sector. Keep an eye on the IBB, which is the broad-based ETF, and CELG, which we traded today nicely on the short side and made some money in. So a couple of those look decent, and make sure you have some shorts ready to go in case this does continue lower. All right, folks, as always, thanks for listening. This has been Rich for Tradesight.